Hi, and welcome to our year-end tax planning series. I'm Tim Raines, partner here at Patrick & Raines, CPAs. I truly hope that you've been enjoying our year-end video series. If you found this video helpful, I do hope that you go back and view some of our other previous videos, and I trust you'll find them just as beneficial. In today's video, we will be talking about the One Big Beautiful Bill Act, which we affectionately refer to as OB3. So let's dive right in. As we close out 2025, it's important to understand exactly what's changed under OB3 and what's coming in 2026. So let's review some of the highlights, just the highlights, through individuals and small businesses, and then let's take a look ahead at the future for next year. So, starting off with some of the key individual tax updates. The standard deductions, they're going to be higher this year. In 2025, the standard deductions were increased to $15,750 for individuals, $23,625 for head of household, and $31,500 for married filing joint. Seniors under OB3 actually get an additional $6,000 deduction, but please be careful. This phases out for higher income earners, $150,000 for married filing joint, or $75,000 for single folks. Also had a change to the SALT deduction. That is our state and local tax deduction. It has rose to $40,000, or $20,000 if you're married filing separate, but it also phases down for those having income above $500,000. Another change is into the child and adoption credits. The child tax credit increased to $2,200 per child under the age of 17, and the adoption credit, it's up to $5,000 and it is refundable. There are a couple of new deductions as well. For example, up to $25,000 for tips, $12,500 for married filing separate, $25,000 for married filing joint. For overtime is now a deduction, and $10,000 of loan interest on your car is now also a deductible item. Some of the 529 enhancements that we have is that it's now going to cover K through 12 and some other credentialing expenses such as certifications and things like that. Some changes to the energy credits. Some of the ones that we've really enjoyed up until this point are indeed expiring, and that's unfortunate. Things such as clean vehicle credits and home improvements, a lot of those have just been not renewed and allowed to expire by Congress. Now, let's switch gears into the business tax updates. For one, we have the qualified business income deduction, which is, QBID. It is 20%, and it is now made permanent. So that will not expire, but we all know that permanent for Congress means until the next group gets in office. But at least that helps alleviate some of the worry we've had and has allowed us to do some better planning around that QBID. There's also full expensing for bonus depreciation, so that's good to go. It's 100% bonus, and Section 179 has also been made permanent. There's also some slightly higher limits, but this is the immediate deductions for certain things that you buy. You're able to write them off if they qualify, just really upfront and not having to depreciate them over time. So that's a really handy benefit. They also allow now immediate expensing for domestic research cost. That was something that we've had in the past, it's went away, and now it's back. So we're excited to have that back. Also, regarding qualified small business stock, there was a holding period for the capital gain exclusion. It's now been shortened from 5 years to a tiered structure that starts at 3-year mark. This is for a lot of times small businesses who start their companies from scratch, and they've owned that stock consistently since the day it was started and founded. So that's something to look out for some of our small businesses. The new capital gain is the new tiering threshold. It's going to start for stock acquired after July 4th, 2025. You're going to find a lot of little references, especially during the Trump administration, to things like July 4th, just very historically relevant dates. So it's kind of interesting how they threw those into bills. A few other incentives that have come up is the paid family and medical leave credit. It's now permanent, and that's been expanded, as well as the above the line charitable deduction for those folks who don't itemize. This has been increased and has also now been made permanent, which is great news for those who don't itemize. Here are a couple things to look out for 2026. We have a lower income tax rates are going to remain in place throughout 2024. The standard deductions are going to stay nice and high. They're not going to drop back down to the pre-OB3 levels. And the personal exemptions, those are still just eliminated. Mortgage interest rules. Recall that if you had what they call a jumbo loan, or you had a mortgage greater than $750,000, there was some disallowance for those larger mortgages. And so what they've done is they've made that permanent. So that $750,000 limit is still in effect. On the charitable contribution front, there were some changes here, and it's good to pay attention to these. Again, going back to the non-itemizers, if you do not itemize, you can still take up to $1,000 or $2,000 if you're married filing joint. That has also been made permanent. Please keep in mind that you're going to have to maintain proper documentation from the charities, and you need to keep those in your file, and it is only for cash contributions. It is not for things like non-cash, Goodwill, Salvation Army, Vietnam vets, those sorts of things. We're literally talking about cash deductions only. Also, on the energy incentive front, we have the alternative fuel vehicle refueling credit and the contractor's energy efficient home credits. Those are going to terminate as of June 30 of 2026, so be aware of that. And then we have something new called the Trump accounts. Now, these are specific and a new type of individual retirement account. So it's similar to an IRA, and this allows parents, grandparents, and other authorized individuals, check the code, make sure you qualify, to establish a new account for children. We're going to call them Trump accounts. And this allows encouraging children to get started saving earlier and allow others to help them do that by contributing into these accounts. Now, there is a pilot program where for newborns, anywhere between January 1st of 25 and December 31st of 28, the US government is actually going to put in the first $1,000 on your behalf. So once you establish an account, the IRS will go ahead and make a contribution as well. That's actually a pretty cool benefit. It's a nice way to get started on some savings for children. Please be sure to check the rules. Some other changes. Beginning in 2026, the Form 1099 has a reporting threshold that used to be in the $600 range is now up to $2,000. So if you've got folks that you're required to send a 1099 for that are below that threshold, you're no longer required to complete that 1099. Also, the AMT exemption and the phase-out thresholds, those are going to remain pretty high too. They're not going to revert back to the pre-TCJA rules. So a couple of planning tips here. Please review your eligibility for some of these new deductions and these credits. Take a peek at them, try to do it before year end to see if there's any of these things you qualify for. Consider the timing of some of these major purchases. You may want to go ahead and buy now if the credits are expiring, or you may want to delay until a little later, knowing that you could get a deduction in 26 for some of these things. So for small businesses, we need to evaluate your investments and compensation strategies just to make sure that you're maximizing some of these new expensing rules. So please plan ahead for 2026, especially some of the energy credits. If you've got new ones on the way, go ahead and consider those Trump accounts. And as always, please check with your tax advisor just to make sure that you understand some of the the nuances of some of these rules, if they may apply to you, it's worth reaching out. Also, if you're in a state outside of Florida, there may be some additional complexities there. Some of the states are picking back federal and some of the states are not. So you'll want to be mindful of that. So just a few final thoughts. The OB3 is bringing about some significant opportunities as well as some complexities. We ask that you proactively begin planning now, or allow us to help you plan now, to help maximize some of these benefits, and so we can just avoid some surprises come tax time. Again, thank you for watching, and if you have any questions regarding OB3, please feel free to reach out to Patrick and Rains. We're here to help you close out the year with confidence, and we look forward to serving you.